$30,000 can get you into a $600,000 home in 2026. 5 years ago, you'd need $120,000. What changed? The government is literally paying your insurance fees. And 90% of first home buyers have no idea this exists. Let me show you everything. I've broken down over 50 first home buyer journeys this year. Know what I found? 3 mistakes cost people an average of $47,000. I'm going to show you how to avoid all 3. Here's the plan. 7 stages. Save the deposit, but not the way you think. Figure out what banks will actually lend you. There's a loophole here. Stage 3 is the government money hack. This alone saves $15,000 to $25,000. Then finding property, finance, offers, and keys. But here's the critical part. Stage 3 and Stage 5 have hidden traps that tank deals. I'll show you exactly what to watch for. Legal disclaimer. This is education, not financial advice. Always consult licensed pros for your situation. Let's go. Stage 1. The deposit. And mistake number 1. Most people hear 20% deposit and give up immediately. That's $120,000 on a $600,000 house. Who has that sitting around? Here's what real estate agents won't tell you. 5% is enough. That's $30,000. 4 times less. But wait, doesn't 5% mean I pay LMI? Yes. Lender's mortgage insurance. Normally costs $10,000 to $20,000. This is where people mess up. They see that fee and panic. I can't afford this. So they wait another 3 years saving. Meanwhile, property prices go up 8% per year. That $600,000 house? Now $777,000. Congratulations, you saved $15,000 on LMI, but the house now costs $177,000 more. This is mistake number 1, waiting too long. But here's the twist, and pay attention because this is huge. The government scheme in Stage 3 makes you pay 0 in LMI. So you get in with 5% and skip that $15,000 fee. I'll explain how in 2 minutes. Quick numbers for $600,000. 5%, $30,000. We'll skip LMI with the government trick. 10%, $60,000. 20%, $120,000. You also need stamp duty. NSW, $25,000. Victoria, $31,000. Queensland, $15,000. Ouch. Plus inspections, legal fees, moving, another $10,000. Hack alert. First Home Super Saver Scheme. Salary sacrifice into your super. Withdraw it for your deposit. Tax benefits mean you save about 15% more than regular savings. Link below. It's literally free money. Coming up, how much will banks actually lend you? There's a dirty secret they don't advertise. Stage 2. Borrowing capacity. And here's that dirty secret. Banks have a number they show you. You can borrow $650,000. Great, right? Wrong. That's the maximum. They expect you'll never borrow the full amount. Why? Because at the max, you're one emergency away from missing payments. Here's the insider move. Borrow 80 to 85% of their max offer. Banks love this. Better rates, faster approval, less scrutiny. They assess 5 things. 1. Income. But here's the trick. Show them stable income. That side hustle with irregular payments might hurt you. Focus on your main salary. 2. Debts. That $5,000 credit card limit? Even if you owe 0, they count it. Cancel unused cards before applying. 3. Expenses. Banks look at your statements. $200 on Uber Eats last month? They notice. Clean up spending 3 months before you apply. 4. Job type. Full-time beats contract. They want stability. 5. Credit score. One late phone bill can drop you 50 points. Check your score now. It's free. Rule of thumb. 6 times your income. Earn $100,000? Borrow around $600,000. But remember, that's the max. Aim for $500,000 to be comfortable. Smart move. Get pre-approval before you even look at houses. This is your power move. Sellers take you seriously. You don't waste time on houses you can't afford. Mortgage broker or bank direct. Broker wins 90% of the time. They access 20+ lenders. Banks only offer their own products. Brokers often find rates 0.3% lower. That's $1,800 per year on a $600,000 loan. Next up, the government scheme that saves you $15,000 to $25,000. This is the most important 90 seconds of this entire video. Don't skip ahead. Okay, stage 3. This is it. Remember that $15,000 to $25,000 LMI fee I mentioned? Gone. Completely eliminated. The Home Guarantee Scheme. Here's how it works. Normal situation. You put down 5%. Bank says risky, pay us $20,000 insurance. You either pay it or give up. With this scheme, you put down 5%. Government tells the bank will guarantee the other 15%. Bank says, okay, no insurance needed. You save $20,000. Just like that. But here's why nobody knows about this. Only 35,000 spots available per year across all of Australia. It's first come, first served. Applications open July 1st. They fill up in weeks. 3 versions. First home guarantee, most people. Income cap is $125,000 for singles, $200,000 for couples. Property price caps vary. Sydney, it's $950,000. Perth, $600,000. Regional first home guarantee, buying outside major cities. Same rules, different areas. Family home guarantee, single parents with dependents. This one's available year-round, doesn't have the July rush. Real talk. This is mistake number 2. People don't apply early enough. July 1st hits, they're still thinking about it. By July 15th, spots are gone. They miss out on $20,000 in savings. Set a reminder. June 25th, get your documents ready. July 1st, you apply. Don't hesitate. Now, separate thing. First homeowner grant. This is actual cash. NAS dollars. $10,000 for new builds. Victoria. Up to $20,000 in some regions. Queensland. $15,000 for new builds. WA. $10,000. Every state is different. Some require new construction. Some only regional areas. Check your state revenue office, link below. Add it up. Government guarantee saves you $20,000 in LMI. Grant gives you $10,000 to $20,000 cash. That's $30,000 to $40,000 in total help. Remember that $30,000 deposit I mentioned at the start? The government basically just paid it for you. If you're finding this valuable, hit subscribe. I break down Australian property every single week. More insider strategies coming. Stage 4, finding the actual property. And here's where mistake number 3 kills deals. Stage 4, property hunting. This is where mistake number 3 happens. People get emotional. They see a nice kitchen and forget to check if the building is falling apart. True story. Guy finds his dream apartment. Modern, great location. $580,000. Excited. Makes an offer. Wins. Then reads the strata report after buying. Guess what? Building needs $2 million in urgent repairs. His share? $40,000. Special levy. Due in 6 months. He couldn't afford it. Had to sell at a loss. Lost $65,000 total. This is mistake number 3. Skipping due diligence. Here's your checklist. Screenshot this. For apartments, strata report. Read every page. Sinking fund balance should be healthy. Previous meeting minutes, any disputes? Insurance coverage, is the building properly insured? Upcoming levies, any special assessments planned? For houses, building and pest inspection, mandatory. $600 investment saves $60,000. Council zoning, can they build a high-rise next door? Flood maps, check council website. Soil quality, especially if you're building. Future infrastructure, New train line adds value, new highway doesn't. Use domain and realestate.com.au, but here's the insider trick. Filter by days on market. Anything over 90 days? Sellers are motivated. You have negotiating power. Average search time, 3 to 6 months. That's normal. Don't rush because FOMO hits. Rush equals mistakes equals expensive lessons. Coming up, locking in your finance. There's a hidden clause in most loans that can cost you $8,000 if you're not careful. Stage 5, final finance. And that hidden trap. Pre-approval done. Property found. Now you lock it in. You submit property details. Bank values it. Takes 1 to 2 weeks. You get unconditional approval. Now, loan structure. 3 types. Fixed, rate locked 1 to 5 years. Predictable. But here's the trap. Most fixed loans have break fees. Want to refinance early? Pay $5,000 to $15,000 to exit. Read the fine print. Variable. Rate moves with market. Flexible. You can make extra payments without penalties. Offset accounts usually included. Split, half fixed, half variable. Best of both. This is what 70% of smart buyers choose. Here's what banks don't advertise. Comparison rate versus interest rate. Interest rate, 6.5%. Comparison rate, 6.8%. That 0.3% difference? Fees. Application fees, monthly fees, package fees. They hide them in the comparison rate. Ask your broker, what's the real cost over 5 years, including all fees? Get a number. Compare that across lenders. Pro tip, negotiate. Seriously. Tell your broker Bank A offered 6.3%. Can you beat it? They often can. I've seen people shave 0.2% off just by asking. That's $1,200 per year on a $600,000 loan. Next, making your offer. Auction versus private sale. Completely different strategies. One wrong move costs you the property. Stage 6, making your offer. Strategy time. 2 completely different games. Private sale and auction. Private sale strategy. Start 5% below asking price. Sounds aggressive? It's standard. Sellers expect negotiation. They usually list 5 to 10% higher than they'll accept. Example, house listed at $620,000. Offer $590,000. Seller counters $610,000. You settle at $600,000. You saved $20,000 by asking. Include conditions. Subject to finance, protects you if bank says no. Subject to building inspection, your escape hatch. 30 to 60 day settlement gives you time. Cooling off period, 2 to 5 days depending on state. Change your mind? Pay 0.25% penalty and walk. On $600,000, that's $1,500. Small price for peace of mind. Auction strategy, completely different. No conditions, no cooling off. You bid, you win, you're locked in. 10% deposit paid immediately. Do this before auction day. Building inspection, $600. Pest inspection, $300. Read the contract with a solicitor. Secure finance unconditionally. Auction psychology hack. Never bid in round numbers. Everyone bids $580,000, $590,000. You bid $587,500. You look serious. Psychological edge. Set your limit before you arrive. Write it down. Stick to it. Auction fever is real. People overpay by $50,000 caught in the moment. Use a conveyancer or solicitor. $1,200 to $2,000. They save you from legal nightmares. Worth every cent. Final stage coming. Settlement day. The moment you get keys. Plus one last warning about insurance timing. Final stage. Settlement. This is it. 30 to 90 days after contract signing, everything transfers. Settlement day. Lender sends money to seller in the morning. Title transfers to your name by midday. Keys available in the afternoon. Your conveyancer handles it. You usually don't attend. Critical warning. Insurance must start on settlement day, not the next day. Settlement day. Why? The second title transfers, you're liable. House burns down that afternoon? That's your problem. Call your insurer the week before. Confirm exact settlement date. Set insurance to start that day. Final inspection. Do this the day before settlement. Walk through. Check everything. Any damage? You have 24 hours to raise it. After settlement, insurance active? Check. Utilities transferred? Check. Address updated? Check. That's it. You're a homeowner. But remember those 3 mistakes? Let's recap those 3 costly mistakes. Mistake 1. Waiting too long to buy because of LMI. Costs you $177,000 in price growth. Solution. Use the Home Guarantee Scheme. Mistake 2. Missing the July 1st application deadline. Costs you $20,000 in LMI fees. Solution. Set your reminder right now. Mistake 3. Skipping due diligence. Costs you $40,000 in unexpected repairs. Solution. Read every report. Every single page. Avoid these. You're ahead of 90% of first-time buyers. 7 stages. Save deposit smart, borrow strategically, grab government money, hunt carefully, lock finance, negotiate hard, settle smoothly. This is education, not advice. Work with licensed professionals for your specific situation. Hit subscribe if this saved you money. New Australian property breakdowns every week? Comment below. Which stage are you at? And which mistake surprised you most? I respond to every comment. You've got this. 2026 is your year. Let's make it happen.